My name is Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my YouTube station. I've been on the national news many times. My last interview was on News Nation a week ago. Go to my website. You can see those interviews. I used to work for the IRS, so I'm one of the more credible sources that you're going to find on YouTube. I've worked thousands of IRS cases. Like I said, I am a national expert, and people do know me nationally for the most part. Many people in the community. Many people do not know of the hardship program that IRS offers. It's called currently non-collectible, and I want to explain what it is. It's important you understand what the hardship program is. I would say half the cases that I get into my office, people cannot pay their IRS tax debt. Many had a lot of money at one time. They lost the money. Many have just kind of have had bad luck or something happened to them and they had a dip. So if at this current time you are having a hardship and you can't pay, this is what IRS is going to do. They have a program. It's kind of called currently non-collectible. At IRS, we used to call it 53 because that's the form that we input these documents on. So how you get in the hardship or currently non-collectible program is IRS looks at a current financial statement. The financial statement is either going to be the 433AF or the 433A. Those are the two forms. The service center, which most cases generate from the 1-800 numbers and those letters, they use the short form 433F. They want to close the cases quickly. Their revenue officer will use the 433A. What's going to happen after that? They look at it and they say, okay, this person currently cannot pay their tax debt. Now, what currently means is at this given time. So what can happen is IRS, in fact, will go ahead and look at your case a couple years later by sending you that same financial statement and see the condition that you're in. During that year or 2-year program that IRS puts you in, they're currently non-collectible. They don't look at any fluctuation of your income. They don't know whether you're doing better, worse. They have no idea. So at the current time, the person making that decision by reviewing your documents determines that you're currently non-collectible. You're safe. But remember, penalties and interest run. If you're a W-2 wage holder and you don't change your W-4, they're going to take your refund. It is possible that IRS may never bring your case out and that case will get written off down the road. We don't know. It all depends on the debt and whether IRS uses a triggering factor to bring your case back out. Anyway, my name is Mike Sullivan. I'm a former agent. I work cases. Now you know everything you need to know. So the only recommendation that I make you, and this is the most important thing, I hope you stayed here, because when IRS looks at that financial statement, the most important thing you need to know is they are going to use the current financial statement. When they use that, they're going to use the National Standard Program. So you've got to Google the National Standard Program, because the expenses you put in, IRS may not allow. So Google IRS National Standard Program and find out, because IRS is going to use their expenses for food and clothing, housing and utilities, car payments, and car expenses. Make sure you're within those standards. If not, you're going to get a large payment agreement. So I'm giving you the warning now. Lastly, make sure all tax returns are filed. You know everything now about currently non-collectible. Everything. Call me if you need me. I can get you currently non-collectible if you qualify, because I know all the secrets. Give me a subscription.